And joining me today is Davis Gaynes, the President and COO of Chaikin Analytics. Davis, are you with us today?
I am.
All right, fantastic. Ladies and gentlemen, we had one gentleman chime in already, say the sound is okay. If you could just, a few of you let us know if you can hear us coming through okay, if you have good sound there. I appreciate it. Asim, I believe, and a couple others are coming in now as well. Bryant, thank you. Excellent. All right, so we've got good sound going, and we want to welcome you all to the presentation today. And we've got a lot to cover, so let's jump right in. Now, I just want to give a brief introduction to myself. Again, I'm the Director of Education here at PowerOptions. PowerOptions, of course, is a patented suite of search and analysis tools designed for self-directed options investors. I've been an active options investor and working with the PowerOptions staff here for the past 11 years. I have co-authored 2 books on options trading and edited other books as well, one on naked puts, one on protective options strategies, and one on credit spreads and iron condors. And over the years, of course, I've co-presented various seminars and webinars with various other brokers, Trade King, Options Express, for example, options investing groups, different groups out in Atlanta and Dallas, and other parts of the country as well, and several online investing communities also. And of course, I host all the presentations we do at PowerOptions for options education and showcasing the patented tools on PowerOptions as well. Now, Davis is going to discuss with us the Chaikin Analytics tools, the Chaikin Power Tools, and these are very powerful tools to help you just sort of get through the abundance of stock analysis, technicals, and fundamentals to quickly find good positions that match the sentiment that you're looking for. Davis has been the President and CEO of Chaikin Analytics since 2013. He was a former principal of the Jenga Group located out in New York. He's also a former executive of Instinet Corporation and parent company Reuters for 17 years, and the co-head of Reuters Business of America in '98. And he's joining us today. He's going to give us a look at the Chaikin tools and show us exactly how powerful these tools can be to help you with your stock research and analysis. And what we want to cover today, this is what you're going to see today. This is why you're here. We're going to show you the power of the Chaikin tools for stock analysis, how easy it is to identify positions that have a bearish trend, a bullish trend, or a neutral trend. And Davis is also going to give you insight to the proprietary algorithms that Mark Chaikin set up to use this powerful tool for stock selection. And then we're going to take it a step further, and we're going to show you how you can use those sentiment guidelines and those stocks that you can find using Chaikin to find ways to implement options trades, how you can better protect your bullish stocks than using a simple stop order or a trailing stop loss, for example. For those of you that like to speculate, we're going to show you how to quickly use a tool to find the best long option, whether you're bullish or bearish sentiment on a particular stock. We're also going to take a look at a quick way, a quick powerful tool using PowerOptions to find leveraged credit spreads for income, whether you have a bullish or bearish sentiment. With that being said, I think I'm going to turn things over to Davis. Davis, are you ready to talk to us about the Chaikin tools?
I am ready to take control.
All right. All right, so going ahead and send that over to you. So you can just select now to show your screen, and we'll get, there we go.
Okay. So I'm very happy to be here, and I thank all of you for coming on board. I thank the folks at PowerOptions for having us as a partner with them. One of the things you need trading options is you need an edge. You need an edge to make money. It's a tough game. I don't think anyone says different. And what we'd like to do is try to show you one way to get an edge by helping you learn how to point yourself toward those stocks that are going to help you make money, those stocks that are directionally going to point you to where you want to be on the option side. In a volatile market like this, you've got lots of opportunities on the upside, on the downside. In some ways, I think for the option player, a better market that we had the past couple of years when everything was kind of going in the same direction. So I'll get very much into playing both sides of that coin, the long side and the short side. I'm going to start taking you through what it is, give you a little background on Chaikin Analytics as a product, a service, and research, and some of the how and why it works. And then we'll get into how to take advantage of it. And as Mike said, we're going to trade back and forth a couple of times so we can actually show you, after you've picked the stock, how to actually put on that options position. Now, for my disclaimer, Chaikin Analytics is not registered as a broker-dealer or investment advisor with the U.S. Securities and Exchange Commission or any state regulators. We don't recommend the purchase of any stock or advise suitability. The information presented in the webinar is generic in nature and not to be construed as an endorsement, recommendation, investment advice, or solicitation of any kind. Thank you for that. So, what do we give you with Power Options? Most importantly, we would call Chaikin Analytics a GPS for making money. It's about finding the winners, again, both on the long side and the short side. It allows you to be and to know the fundamentals without being a research analyst, to understand the technicals without being a market technician, and importantly, to profit from a proven quantitative model without having to do the math. And we pinpoint, particularly important, I think, for the shorter term and for the option trader, profitable entry and exit points with our buy and sell signals. Now, we talk in our email, if some of you saw it, that we sent out, the idea of 5 steps to success. We're big on discipline, we're big on methodology, and number 1 is about finding a proven methodology you can trust. Emotion is something that's inherent in all of us. I think when you're dealing with the markets, the better you can get away from emotion and stick to a proven methodology and be disciplined, the better off you're going to be. We're going to show you how to play good defense to avoid the landmines that kill your performance, play good offense by helping to find winners, again, both on the short or long side. We use industry group work to help surface the best candidates. And finally, we use our signals, and we'll show you how to do that for timing as to when best to buy and sell. I like to use this blackjack analogy when we talk about something like discipline. So in the classic example, and I should ask, because I'm guessing I have a lot of option players out there, do me a favor and type a Y for yes if you are a blackjack player and you enjoy going to the casino and playing the game. Mike will give us a report back on how many yeses we got. But this is, a classic hand. Dealer has a 7. You've got what we call a soft 18, meaning you can take a hit or you can stick with it. And the question is, what do you do? And you've got basically 2 options. You can shoot for that 19, 20, 21, or you can stick with your soft 18. Now, anyone who's played blackjack knows it's pretty simple. If you want to maximize your winnings, and the dealer has a 7 showing, and you have an 18, you stick. There's no question about it. It's about being disciplined. This is a back-tested system in the world of blackjack. It's based on probability. It's easy to follow. And most importantly, it works. So that's our focus at Chaikin, a discipline based on solid principles with tested results that you can follow, getting away from emotion. The problem we all have investing in the world today is information overload. Now, there's information overload as it relates to investing, but the reality is we all have a life outside of investing. Although for some of us who work in investing, obviously we have more time for it. For most of you, you've got all these other things going on, and when you focus on your investments, what you need is the ability, or in our case, the solution, which we call Chaikin Analytics, or for options, Power Options, to cut through the clutter, to find what you need to find quickly, efficiently, in a way you can trust it to point you in the right direction. Now, Chaikin Analytics comes both through a PC or as an iPad app. I'm going to give you a 1-minute tour right before I get into my presentation, just to give you a feel for the actual product itself. Now, the first thing I'd like to say is it looks like a traditional market information system that's based on technical analysis, and I will start with telling you it is not that. It definitely has a look of that because we're showing you a chart and some really cool graphics, but first and foremost, it is based on fundamentals. It's based on what we call the Chaikin Power Gauge, which is our quantamental model that ranks stocks between a very bullish and a very bearish rating based on 4 components and 20 factors. It's backed up by some key technicals, by a price chart in history, by Chaikin Money Flow that our CEO, Mark Chaikin, invented for the market about 30 years ago now, that's used basically on all modern trading systems, an overbought, oversold indicator, a relative strength indicator, and importantly, the Chaikin Power Gauge history, so you can actually backtest what the model said at any time and see when it was bullish or when it was bearish. So the first level of analysis for us is the power gauge. Second are the technicals. And third, I mentioned we have signals that actually can be put onto any chart and pick buy and sell points in the short or long term. And then on the other side of the screen, we have some workflow tools that let you create lists, that populate a watch list, and also let you do industry work, look at ETFs, indices, and some pre-formatted Chaikin hot lists that we've created for you. So it is a very powerful and robust workstation. And kind of like information overload, I will overload you with information today as I give you that quick view of the system as a whole all at once. And let's come back to our presentation, and we'll get back to the product a little later. So again, the key is focus, that discipline and methodology that allows you to focus on exactly what you want to do and gives you the tools and ability to do that. The Chaikin Analytics method, again, starts with the power gauge. Every stock is ranked with 5,000 U.S. equities. Very bullish, bullish, neutral, bearish, or very bearish. The model is not trying to pick the next great American company. The model is putting a rating on every stock and suggesting whether it will outperform, i.e. very bullish, or underperform the market. And when we talk about the market, our benchmark is the Russell 3000. So that's our focus, the Russell 3000 and outperforming the market. Secondly, the Chaikin technical indicators, volatility bands, money flow, the overbought, oversold, and relative strength indicators. And the third level from timing are the Chaikin buy and sell signals. The power gauge is reliable and, while simple, not simplistic. It is a very sophisticated model, in my opinion, only seen through institutional money managers who are managing money for their own account, as opposed to the model that you could actually have access to. The power gauge rating is based on 4 components. It's based, number 1, on financials. That's the biggest part of the model, and those are traditional value-oriented component or factors like long-term debt to equity, price to book value. These are the things that U.S. investors and worldwide investors, I should say, have been looking at for well over 100 years. That's what Warren Buffett bases his investing on, as well as many other successful investors. Growth investors look at earnings. That's another key component with 5 factors like earnings growth, earnings surprises, projected PE ratio, a core component of the model. Technicals are only 15% of the model, a component but a relatively small one. And what we would call our secret sauce are expert opinions, 5 factors that are very unique as being part of any model you've seen, including things like short interest, net insider buying, qualitative analyst ratings. We actually look at whether analysts are raising or lowering their ratings on a stock, put them all together, and create, in effect, a digital rating that we can put into the model. And very importantly, industry relative strength, what we think is one of the most important factors in stocks individually as to how they're going to do against the rest of the market. And these 20 factors together into these 4 groups are all ranked and rolled up together into a single rating. And you can look with this slider at each and every stock of our 5,000 and see where each component is, and then look at the individual factors and see where they are. So you can really drill into the model to understand why it is suggesting a particular stock is very bullish or very bearish. Now, if you're going to bet on a model, you ought to know something about how that model works. Mark Chaikin spent the year 2010 building the model. He went through over 200 factors to find the 20 he used. And when back-tested, these are the results of the model. Now, quite frankly, any back-test ought to look terrific. The Russell 3000, our benchmark, was up 2.5% over that 10-year period. The model, if you look at just the very bullish stocks, is up over 22%. The real-world performance is probably a better indicator. In 2011, Mark locked down the model. Through 11 to March of 2014, the first quarter, which we'll update soon, the Russell 3000 was up 15%. The very bullish names were up almost 600 basis points above that. The bullish names a couple of hundred basis points, the neutral names almost the same, and importantly, the very bearish and bearish names underperformed, right? Your opportunity to short, and you get what you look for, which is that stair step where the ratings actually performed as we expected. And for the record, for the first time this year, 2014, we're running our first real portfolio with real money, and currently, for the year to date, we're up over 700 points better than the S&P. So that's kind of exciting. And another stake in the ground in terms of credibility is a deal we did with NASDAQ last spring where we created 3 co-branded indices for NASDAQ and Chaikin, the NASDAQ Chaikin Large Cap Index, Small Cap Index, and U.S. Dividend Achievers Index. NASDAQ is actually out marketing those right now to create ETFs for the money management community. All 3 of these indexes are beating the core NASDAQ index year to date. So what am I actually going to buy? We have what we call classic bulls and classic bears that follow a pattern, back to that idea of discipline and methodology. So number 1 and most important is the power gauge, and we're going to look at stocks to buy that are rated bullish. Number 2, we're going to look for a price trend headed up. The brown line on our charts represent a 200-day moving average, and the best stocks you're going to see are riding above that 200-day moving average while they're doing well. We're going to look for strong Chaikin money flow, and when we show you things like money flow or relative strength, you'll notice the pictograph, the visual, rather than a number, so you don't have to remember a number. All you have to do is look for green. All throughout Chaikin in general, green is good, red is risk. And then finally, look for a buy signal in Chaikin Analytics, which are these little green arrows, or if they were red signals, they would be sell arrows that appear on the chart. So Love is our poster child, Southwest Air, for a bullish stock, classic bull, over the past year or so. And there are a few key things we want to talk about here, back to methodology. Number 1, we're looking at the power gauge, very bullish. And by the way, the screenshots here are from the iPad. The iPad and the desktop app are very, very similar, different look and feel. And these are the actual iPad, and you'll get to see the desktop when we do the live presentation. So it's a very bullish stock, number 1. Number 2, you'll see it's above its long-term trend. Number 3, you'll see relative strength. Our most important technical indicator is solid green, i.e. very strong. Relative strength, as we show it here, is relative strength versus the S&P 500. And finally, if you look at the Chaikin Power Gauge historical results on the bottom, you can see it's been bullish virtually every day of the year. So that's what we look for in the classic bull. Money flow is always, virtually always, has at least a little bit of red. And most of the charts we look at are going to have, from that market break a couple of weeks ago, a little V form where the market pretty much tanked worldwide on Ebola fears and China fears and growth fears and so on. So the fact that there's a little blurb of red in there doesn't bother us at all. And then finally, we've got the Chaikin buy signals. These are what we call oversold buys, meaning stocks that are oversold on a short-term basis, which is a great time to get into them. So this is what our classic bull looks like, and it's also, by the way, in a strong industry group, another key factor we look at. And most importantly, one of the things we talk about is the market agreeing with the model. So the model is the power gauge, very bullish. The market is what's represented by relative strength. There have been many white papers by academicians, other folks who build models, who talk about relative strength as that key indicator. The opposite, what to sell, are what we'd call a classic bear. And again, power gauge rating, not bullish, but in this case bearish. We're looking for a price trend on the downside below that 200-day moving average. We're looking for relatively weak performance, and we'll see here that the relative strength is all red. Chaikin money flow is weak. We see a mix of red and green, but down here, when we're at the end of our chart, when we're ready to make our decision, it's certainly red. And finally, a sell signal coming from Chaikin Analytics. And again, for option players in particular, looking at the shorter term, these oversold buy and overbought sell signals are terrific signals, as opposed to our relative strength signals, for example, which might work in the short term, but are very, very effective long term as well. So the classic bull and the classic bear are those stocks we like to look at. And we had a couple of real good examples to show you. One of them was Whole Foods. And what I say to folks when we're looking at stocks in Chaikin is the first thing to take your eyes to is right down here. And you look at that power gauge, and you look at relative strength, and when you see they're both all red, it is very rare that you're going to see a stock do well with a stock that behaves against the market so poorly and has characteristics that cause the power gauge to be so negative. And sure enough, this little circled area is a point where Mark Chaikin called right before earnings last spring as earnings come up, that this was a good short, and sure enough, it wasn't just a good short. It had this huge break, and it was a great short. Mark writes a letter every Sunday night called Market Insights. So when you get Chaikin, you also get his overlay as a 40-year veteran analyst who is not just looking at Chaikin, but also studying the market, the economy, the global economy, and various other factors that he looks at, and overlaying that on top of the model. So this was a great pick by him for our clients of a classic bull. This is one of our clients writing a note. He had just become a client. He listened to that recommendation. It was the bear of the week that Mark picked, the alternative bear of the week, and he made 190% profit. This the testimonials I have in here are all folks who are trading options, just as an example. And he obviously started out his time as a customer real well with us. And I just like to mention at the same time that Whole Foods looked so awful, was all red, had the sell signals, and was making that break. You could have owned Kroger in the same industry group, which happened to be a strong industry group at the time, and was a classic bull, where you had above the trend, you had the buy signals, you had reasonably good money flow. The market had agreed with the model, and this is what we call a personality change. The stock was coming down, relative strength was negative, the Chaikin power gauge was neutral, the power gauge flipped to positive, the market relative strength flipped to positive, and right after that, the stock was into its movement, but kept going up from the mid-40s all the way up to 46. On that note, I'm going to take a look now back to the live system, and let's take a look and pick an example of a stock. And I think we're going to use one of the screening devices we have, and then take a look at how we might do the option strategy against it. So
Davis, Davis, sorry to interrupt you very quickly. I have a couple questions I wanted to bring up. One question we have from Jay is, on the Chaikin chart here, these dotted lines, do those represent Bollinger Bands there, or is it another indicator?
It's actually very similar but different to a Bollinger Band. Bollinger is actually an old buddy of Mark Chaikin. They were technical analysts together, really. So this is Mark's version of the Bollinger Bands. And I could not give you the formula.
No, of course, I understand. A couple other quick questions here. Back on the last chart, when you add in the green arrows, those are your buy signals. Is that correct? When those green arrows appear on the charts, that was Bryant's question?
Good question. They could be buy or sell. So we have 6 signals from the shorter term oversold, overbought to the longer term relative strength signals. Clicking on any one of them will pop up. Let's see if I can find one that has a few more. Both buy and sell signals. So here's a sell, here's a buy. So think of it as 6 pairs of buy and sell signals that will trigger wherever appropriate. In this case, they're perfect. Not always perfect.
Okay, and then one last question that we had right now is, excuse me, Gerard asked, how does it rate ETFs? We can get into that later. I know that you have the ETF and the indices listing there. You can see it over on the left, the Chaikin groupings that you mentioned. So there's different ratings that you use for the ETFs because you can't use earnings, for example, and past earnings.
No, it's a great question. We actually don't have a power gauge rating on the ETFs. It's something we're looking at doing, but we're not doing it yet. So and I'll take you through some ETF information later, but essentially with ETFs, we're looking at the technicals, and in particular relative strength, which is a terrific indicator for choosing ETFs. And I will hit that before we're done today. One of the things we do, because there are 5,000 stocks out there and it's awful tough to figure out which one to pick, as I don't have to tell you all, one of the reasons you're on the call, is we have some of what we call Chaikin hot lists, and we try to take that universe of 5,000 and help you narrow it down. And one of the ways to narrow it down is what we call the all-signal list. So this is a list of stocks. There are 388 of them today that overnight created a signal, one of those 6 pairs of signals I showed you. And if I were to click right now, for example, on the overbought sell signal, I'm going to take that list of 388 and I'm going to shrink it down to all of the names in this list that triggered an overbought sell signal overnight. So for example, I'm going to click that rating because what I want to get here are the very bearish stocks. And if I click on rating, I can resort my list where the very bearish stocks are on top and the neutral ones and bullish ones are on the bottom. So let's take a look at ALV. And what we think when we look at our classic bear, this is it. We have a very bearish power gauge rating up here. We have relative strength that has gone from very strong as the stock was moving up for a good part of the year. It did that personality change and is now very negative. We've got money flow that's been mostly negative. We're trading under the 200-day moving average, and we just triggered an overbought sell. So if I were looking for a trade for tomorrow, this might be exactly the kind of name I'd look for. And at that point, I would love to know, how do I know which option I want to go for if I'm looking at a naked put, for example, or any other strategy you might suggest. So I am going to stop screen sharing and hand my screen back to Mike. If you'll bear with me as I'm looking for the right button to push.
Yeah, easiest way is just go under attendees, and you should see the two of us under the staff there, and you can just sort of right-click over my name and click Make Presenter there.
You are the man. How easy was that? Okay, you are in control.
All right, thank you very much, David. Okay, so we were looking at excuse me, folks. We're looking at ALV, and here we're taking a look at the PowerOptions suite of tools, which is designed as a tab navigation system. Now, there are several bullish and bearish strategies. We support tools for over 23 of the most commonly used option strategies. And two ways that I would likely approach a bearish situation, actually there are three ways more or less, but the main two ways I would look to is, number one, Davis mentioned a naked put. Well, for those of us that are familiar with power options, the common term naked put means that we're selling a put option, which is a parity trade of a covered call. When we say put buying, we're talking about buying a put without any other kind of leverage against it. We're selling an option against it to create a spread. We're looking for speculation on this position. But the great thing about option buying is that if you're disciplined, you know the amount of money you're risking that you put into a position. The most you can lose is what you paid for the option. And remember, as options investors, the one thing we know is the one guaranteed truth of all options is that as we reach expiration, the time value of the option will go to zero. That's the one truth we always have as options investors. Now, for power options, we have a stock now that we saw at Chaikin, ALV, that we've got a bearish signal on. Now, if you have a bearish signal and you're looking to buy an option, what you most likely would do is say, okay, well, we saw the projection there on Chaikin. We have an idea that we're looking for a bearish decline, and based on the chart, we can see what kind of time frame we'd expect to see the fall based on the last time a trigger was shown up for an oversold or overbought position on a bearish trend, a classic bear on the Chaikin model. So what we want to do now is you may look at an option chain and just start looking at prices and then trying to run a Black-Scholes pricing model or other pricing models to decide which option would give you the best return. That's the long way of doing it. That's a difficult way of doing it. It's time consuming. We're going to take care of that for you. Underneath our long put tools, we do have patented tools where you can search and find just those options and any strategy that match your stock and option criteria. But to keep things simple, we just want to go into the long option finder. There's a tool we created a few years back to keep things simple for our option buyers. And we'll just put in our stock symbol. It was ALV. And the expected price of the stock, we saw the stock on Chaikin at around $95 right now. We got a bearish signal. So let's assume that maybe we're going to see sort of a 5 to 8% decrease in the stock. Let's call it about a $7 decrease in the stock price over the next few weeks. So we'd be looking at a price, a target price of about $88 per share. Now, to keep things simple so I don't overinvest, let's just say we're going to look to put $1,500 into an options position. And our expected price, our target price from this, let's put it out a few weeks. Okay, let's put it right around December 20th, 2014. We could go longer term. If we had a larger expectation, maybe the stock would be trading roughly at around $80 per share in the next 4 months, we could do that as well. But we're just putting in our stock that's bearish, our target price based on the last movement we saw when a bearish signal was triggered, a classic bear was triggered there on Chaikin perhaps. Put in a reasonable amount to invest and our target date. Let's go ahead and submit. In that brief second, the Power Options tool, this is live right now, this is not a slide, we're live on the Power Options site. The Power Options Long Option Finder went out, grabbed every available option for ALV. It grabbed the current price of the option, it calculated for us how many contracts we could buy based on our investment amount, and it ran the various pricing models on all those different options to see which one would give us the best theoretical return if the stock did hit our target price on our target date. So for the potential, even if we were shorter term, and I thought that the ALV would drop here to $88 in just the next 3 weeks at $12.20, we see that the March 2015 option that's further out in time, the 95 put, would give us the best theoretical return of 47% if ALV did drop $7 within the next few weeks or so. And of course, we could also adjust our time frames or adjust our prices if we wanted to see other evaluations. Now, some of you, this is the speculation. And, Fitzroy asked, are these prices at the end of day or live? Fitzroy, these are live. We do offer a real-time service at PowerOptions and also a 20-minute delay position. A 20-minute delayed subscription. But right now, since we're at 4:45 Eastern Time, the market's been closed for 45 minutes. So these are end of day right now. They're not being updated. Hugh asks, we're not going to show them today. Do you have examples for horizontal or diagonal spreads? Absolutely. You see here I have the calendar call view. And under calendar calls, if I was, this is of course bullish, but in the other strategies menu I could select calendar puts, and I could choose to use the search by symbol tool to identify potential spreads on ALV, either horizontal or diagonal, under the calendar call or calendar put menu. But the other quick tool we wanted to show here for our classic bear is under the bear call credit spread. I could look one stock at a time and see things such as the probability values and other values as well. But I want to take a look at what we call the spread chain. And underneath the spread chain, this is a tool that allows us to look at credit spreads, debit spread view, or we can use the put credit and call debit parity. So a bull put credit is a parity trade to a bull call debit. We're going to take a look at the bear call credit and bear put debit parity position. I'm going to enter in my stock symbol, ALV. I'm going to put my spread width at 5. I'm going to put in some basic criteria. Let's put in a minimum net credit of, let's say, 50 cents. It's going to be 1% out of the money for our bear call or 1% in the money for our bull put debit spread. I want a minimum return of 5% and a probability of success of at least 70% on our spread position. Let's go out to December 12th instead of the 17th here. And let me go ahead and submit that. Okay, and so we see that there's only, very quickly, there's only one spread right now for our standard December 20th expiration, 39 days out, that matches our requirements of a 5-point spread, a 50-cent net credit, and is giving us a 75.6% probability. The bear put debit isn't giving us a positive return using midpoint prices, believe it or not, so that's why it's not showing up in our results. Now, we could even go shorter term. I may have to adjust my expectation for minimum net credit, perhaps, or even probability or range out of the money. Let's lower our net credit down to 25 cents and our return just down to 3%. And let's take a look at the November series as well. Okay, and it doesn't look like we have anything in the November series that's offering that high of a net credit. We probably have to lower it down as well. But as you can see, this is a real quick view. That's pretty interesting. It's got to go lower. But this is a pretty quick view to identify the different positions that you might be able to see. Let's go back to the December 20th with our lower numbers, the quick spreads for our bear call credit. With the midpoint here, we're looking at the 105 and the 110. A little bit further out of the money, it's giving us a smaller net credit of 20 cents, but it's still a 4.2% yield, and we still have a good, strong probability of success that this would remain below both strike prices and give us the desired net credit. And of course, if we're looking for a higher net credit, we'd probably want to stick here with the 100-105 bear call spread with a 63-cent net credit, 14.4% yield for 39 days, and a 75.6% probability of success, with the confidence now of having that Chaikin power gauge showing us the bearish movement and the bearish signal for the overbought and in the bearish trend as well. So those are two quick tools that Gerard quickly asked, does it do neutral spreads like straddle and strangles? Yes. We're going to look at that a little bit later on. You see I've got long strangle here. That's more of a position I would use for an earnings event. And in addition to that, excuse me, We also have other strategies such as iron butterflies. We're just not going to talk about those today. We are going to show a couple of those examples when we talk about the classic bullish trend and the earnings plays that Davis is going to go through us now. One quick question. Oh, this Ed, what you're seeing here on the spread chain, Ed asked, does the spread always go from bid to offer? Spreads in ALV are pretty wide. This is showing you the midpoint. The spread chain here is using the midpoint pricing for both the call that you're selling and the call that you're buying, or the put that you're selling and the put that you're buying. So you're looking at the midpoint prices here on the spread chain as well. Okay. Davis, are you ready for me to turn it back over to you?
I am ready.
Okay, let's get back.
You get a wow on that. That's pretty cool stuff.
Yeah, these are the quick tools here for identifying positions one stock at a time. Once you know your strategy, that long option finder is extraordinarily helpful because it really gives you a gauge without having to go through an option chain and do all that math yourself. It's showing you right away which option would give you the best theoretical return. The math you would have had to do manually probably at your broker or on another service to show you which one would give you the best return if the stock hits target price at your target date.
I know that's definitely one of the challenges. We have many, many clients who trade options, and they're constantly asking us, okay, I've decided what I want to do. How do I figure out how to do it? And that was the answer.
Absolutely.
All right. So now we're getting into the one cartoon of the day, our dynamic duo. And you saw me point a couple of times to the bottom of the screen and talk about the power gauge rating and relative strength and having them match. And just to talk for a minute about relative strength, it essentially is comparing the stock to the market over a 26-week period. So it's saying, how did this stock do compared to the market as a whole? It's displayed as that red-green indicator, and it's effectively measuring the persistency of the stock's performance relative to the SPY or the S&P 500. And it stands alone as a bullish or bearish indicator. There have been, as I mentioned earlier, a lot of white papers, a lot of academic work, and a lot of products and companies all focused on this as a key indicator. We agree. And one of the reasons it is simply institutional investors, the big fund managers that really drive our markets, are all measured against the benchmark. Right? It's not about how did you do in terms of raw performance. It's about how did you do relative to the benchmark and, by definition, your competition. Superior returns, by definition, come out of stocks that outperform the market. That's a must-have. So institutional investors that are holding stocks not performing will dump them and find something better because they know if they don't meet that benchmark, they get hurt badly. They both lose assets under management as well as current performance. So it's kind of to some extent, it's a bit of a self-fulfilling prophecy. Stocks that are performing poorly have a tougher time turning around because people don't want to take the chance. But it is an incredibly powerful indicator. The second part of that, something else you heard me earlier, is spotting personality changes. And this is our favorite Jack Nicholson personality change in that movie The Shining, I believe. And essentially what we're talking about is when relative strength changes its color, that's in essence the personality change, whether it's going from strong to weak or weak to strong. And it's particularly powerful when it confirms the power gauge rating. So you've got the power gauge, which is 85% fundamentally oriented. And you've got relative strength, which is a classic technical indicator. And when they're confirming one another, that is when we say the market is agreeing with the model. And that is when, as I said earlier, if you see that red all along the bottom of the screen, when the market is agreeing with the model, the stock's a dog, those stocks rarely, if ever, go on that long climb up, and vice versa. Chaikin money flow can also help confirm a change of personality when that is doing what you would expect it to do, and I'll show you a couple of examples later. Playing good defense, turning lemons into lemonade, and this is really a special slide for option players because for a lot of us who tend to invest on the long side, we just want to get out of stocks like this. But when you're playing options, obviously the short side works as well with puts. And this is a great example where Pandora had a nice long run. Pandora is a classic story stock, right? It's a business where this is an online music. It's my favorite. I pay them $35 a year. I get all I can eat, no commercials, pick the bands I like. It's a wonderful business. It's growing like wildfire. But like many names like this, it got ahead of itself. The earnings and the fundamentals just couldn't support the stock. And when story stocks meet expectations, fine, they'll continue with that story and they'll continue on their upward trend. but when they don't meet expectations, they tend to fall hard and fast. And that's exactly what happened with Pandora. It basically fell out of favor because the fundamentals just couldn't match up to where it was. And you'll see the power gauge went from neutral to negative back in March. Right after that, the relative strength went from positive to negative. That's that personality change. Money flows in the same spot. And right here, right after the stock peaked, Chaikin made clear, get out of this one. And when it started coming down, Chaikin made more clear, really get out of this one. And sure enough, it came down, had a little pop, as they often do after they come down. People figured, okay, the air was taken out, I'll get back in. But now it's all the way back down to 20, lower even than that first drop. So this is really that classic. Sears Holding is another one. Another great opportunity for you as an option player to make money when you see that power gauge that's been negative all along, relative strength, which was positive for a while. Eddie Lampert, the fellow that's been running this for about 10 years, a big hedge fund player, keeps trying and twisting and turning to figure out ways to try to make money with Sears, but essentially it's in this very long downward spiral. And these two circles are market insight calls. When Mark saw, as earnings were coming up, the stock looked like it was about to take a hit, and both times he was correct. Earnings were disappointing, and there was, in this case, a big gap down, in this case, a smaller gap down. But again, great opportunities confirmed by signals. Overbought, oversold are what all these red ones are, and then this red one triggered the last day. When we took this picture, that was a reversal sell. And the point is, again, you've got the model, you've got the market matching the model, and you've got the signals confirming, hey, now is a good time to take that short position, to get out of it if you own it, or in the case of an options player, to look for that put. And then obviously playing offense, what do I buy? Essentially just flip it over. Now we're looking for green. Amgen had an amazing run recently. Healthcare in general, particularly driven by biotech stocks like Amgen, has done really well. The market for, or the model for a long time was neutral with a couple of little spots of bullish, but then it turned solidly bullish last summer in July. Here we go again with a personality change. Relative strength is negative. It goes positive. Money flow is very strong almost all the way along. And sure enough, we get a buy signal here that was a relative strength buy, not a short-term, but one of our longer-term buy signals. And shortly after, the stock really took off. Now, one of the neat things about Chaikin is the fact that you can look at this power gauge ribbon on the bottom, and you can, in effect, backtest how Chaikin has done for any stock over the past 5 years. We're all looking at one-year charts now, but if I was live and I clicked up here, I can also see the 5-year. So it's a great way to get a handle on where the model has worked best, and quite frankly, for you as a potential buyer to really be able to test and take a look at, is this thing actually good on all these stocks or just a handful? Apple's another one. For quite a while, stock was flat, model was neutral, turns bullish, relative strength turns from negative to positive. We get the personality change, money flow follows, and it took that nice long ride up. We've got our little dip here where the market came down a couple of weeks ago, but again, back to signals and the idea that we're pinpointing good buying opportunities. I actually bought it right here at 95. I've been a believer in Apple for a while, and then I wrote it down and bought it again at 98, so I'm sitting with a couple of recent buys up at the 110 level right now. I think it's where it closed today, 109 to 110. And Skyworks is where we talked about the money flow, interestingly, is able to actually confirm the model and the market. And this is a little bit subtle, but typically what money flow shows you is institutional buying or selling. And the way it does that is it measures how stock prices close, i.e. at the very end of the day, are they ticking up and closing near the high of the day or ticking down off the high of the day? When there's a lot of institutional buying pressure, and institutions who are buying big pieces of a company tend to buy stocks for weeks at a time, if not longer, when they want to buy a big percentage, they're always trying to get some more stock done at the end of the day. So when we see positive money flow, green, big mountains like that we call them, that's an indication that the institutions have been buying. So when you see a stock that's actually trading down a little bit in price and money flow is still solid green, that is an indicator where money flow is confirming everything we're seeing down here and giving us even that greater confidence that this is one I want to own. And sure enough, we have the oversold buy triggered here. And then just recently, we had the momentum breakout triggered. So again, the core Chaikin Analytics followed by that signal giving you your timing. And again, for the option player, for the shorter term position taker, that's really your key confirmation to give you conviction to go ahead and pull the trigger on a trade. I'm going to go through some slides quick. Again, I'm putting some things in your head, information overload, but just to give you a feel for what you can get out of Chaikin and just some good investing 101 information. Industry group strength or weakness is huge. What Mark likes to say is when you've got the industry group with you, you've got a tailwind. So if I'm looking to be on the long side, I want to buy stocks in a strong industry group. Weak groups and sectors are for shorts. Strong groups put the wind at your back for long profits. And here's exactly one way to go about finding them. And we're going to actually look at some ETFs just because it's a nice way to organize. We also have the industry groups. But if I'm looking for an industry group, strong or weak, I can look at the ETFs. Here I've got the spider subsectors. I'm looking at the home builders. And anytime you're looking at a list in Chaikin, we give you what we call the power bar, showing you how many bearish, 14, neutral, 16, and bullish, 4 stocks there are in that group. So in this ETF, the home builders ETF, there are 14 bears and only 4 bulls, so that's a relatively weak group. The next slide I would then go to is the home builder ETF. You'll notice the power gauge is grayed out because we don't actually give an ETF a power gauge rating, but the analytics are all there because ETFs trade like stocks, so the analytics are the same as stocks. And we can see here the short, quick personality change to very negative. And we can see the trend downward. So we know that, yeah, home builders, which were really hot 18 months ago, are cooling down. And then we can dive in, and actually by clicking on home builders, we get a tab that shows us all the different components of that subsector. And we're going to take a look at a couple of them just to finish the point. Weak group, you've got stocks with bearish power gauges, negative relative strength, and sell signals all over the place. So these, again, your short opportunities, your put opportunities. USG, another one. Negative power gauge, very bearish. You've got negative relative strength. You've got sell signals. You've got another opportunity. And finally, lumber liquidators, which had this big break. This was I believe, an earnings call that Mark made, where the signal triggered right before earnings came out, and we had that big break from 80 all the way down to, I think, even below 60, and then more recently another one in the same fashion. So again, that focus on when the market, i.e. the technicals, what the stock's actually doing in the real world, agrees with the model, the fundamentally oriented model of looking at a stock and how it's doing based on how people analyze stocks, and when they match, this is the price direction you get. The opposite, just as it seems it would be, we're looking at the healthcare sector. We looked at Amgen earlier and how that was doing. We've got 20 bulls, only 1 bear. We take a look at the actual Spider Healthcare Select, and we see the opposite chart where now it's really strong. And particularly the last couple of weeks since that break, it went up like a rocket ship, almost looks like about 12%. And you can see again, relative strength, your key driver. So one of the things we definitely recommend when trading the actual ETFs are using that relative strength buy and relative strength sell signal along with the core relative strength and money flow. Great ways to pick direction for ETFs. Celgene, another one on the buy side now. We're looking at healthcare. We're looking at the drug company where these buy signals were triggered while relative strength is strong. The power gauge has gone bullish, and you see that great price appreciation we've had since the break in the market. Thing took off again like a rocket ship. WellPoint, another one. And sometimes, by the way, you do see a little bit of negative money flow. It's something to give caution, but not a reason not to buy or sell a stock when everything else is working the way you want it to work. And finally, just the idea that you can look at the broad ETFs, the index ETFs, as ways to actually take a position. So thinking about trading the market, looking at triple Qs, technology outperforming. We've got our very strong relative strength. We've got a buy signal, And again, this is right after that market break, about 3 days after that buy signal was triggered on the relative strength side. And since then, the technology sector is up about 10 plus 10, 12%. And then finally, the energy sector, which got hit really hard for a number of reasons. We had the market break, which was partially caused by falling energy prices anyway. So the sector was already weak, and then when that news hit and the prices started coming down, this one really tanked, as did the obviously the constituents to any of these ETFs, and that was a great one to bet against. Look where relative strength changed. It made that flip right here, days before the peak, and look at that, that relative strength sell signal triggered right near the peak. What a huge opportunity that was. Wouldn't it have been nice to have bought puts on that one?
Absolutely. And this relates to a question that just came in from Raza. It says, how to find a point of reversal of trend? And you're showing it right there. That's that change of personality that you can see with the indicator and as well as the Chaikin Power Gauge also.
That's right. I mean, this is the big kahuna in terms of the market. And our model is very much what I would call a reflection of Wall Street. The factors in the Chaikin Power Gauge are what very traditional analysts, whether they're working for Goldman Sachs or Fidelity funds, they're looking at earnings, they're looking at the value metrics, they're looking at short selling. So what you're looking at when you see our power gauge for an individual stock is in effect a reflection of Wall Street conglomerated, and the secret sauce is the way Mark put all that together, and that's why we think it's worked so well. So you've got that as a fundamental change of direction. You've got relative strength as a technical change of direction, and then you've got signals, which are real technical changes of direction and indicators. So to finish, I just want to hit again, earnings season only happens 4 times a year for a few weeks, but it's a great time to be trading, particularly if you're an option player. And this is where Chaikin really has found some great strength, both on the long and short side. And I'll just tell you a couple of quick stories there. And this is where we'll see some of these gaps, where stocks have gapped up or down. Skyworks is a name that Mark has been following for quite a long time. It got into the end of the year and flipped from negative to positive relative strength. It had that personality change. Power gauge has been virtually solid. And you'll notice, by the way, most of the power gauges, a lot of them anyway, are a little bit neutral here, and that's exactly where that market break occurred. So knowing the whole market was down at that point, we can, to some extent, ignore that neutrality and recognize a very solid positive power gauge. And then here we got the oversold buy, and here we get the momentum breakout. And again, these are all 1, 2, 3 points when earnings came out. And what we find, we don't have the back testing, we haven't done the real research yet, but intuitively and anecdotally what we see, when very bullish stocks are coming into earnings season, they tend to surprise on the upside. And when very bearish stocks come into earnings season, they tend to surprise on the downside. If you buy the idea that that power gauge is reflective of Wall Street, it just makes sense, because it's simply picking up what the analysts and the folks who follow these companies much more deeply than we can are thinking and doing. And in fact, again, another testimonial where I kind of remember this person because I actually talked to them at that point. They had just become a client, and the thing actually paid for their year's subscription. And Mark's Market Insights is a special overlay you get to the product itself. Netflix was one of the biggest ones I think we've ever seen recently. This was his bearish stock of the week. Earnings were coming. The power gauge was flipping a little bit between neutral and bearish, went solid bearish in September. We can see the personality change. Came a little bit later, but right here we got the overbought sell. Earnings were coming out, negative power gauge. Mark picked that as the stock of the week, and overnight it went from, I think it closed at 430-something that day and traded in the 350 to 60 range the following day. Huge opportunities. And I know we had one client that bought near-term inexpensive puts and made 50 times their investment that day. And the last example of the day is one from a couple of weeks ago, Yelp, which is, again, somewhat of a story stock, been very volatile. You see a bunch of big breaks up and down. Power gauge negative. It had struggled, relative strength, it struggled to get back to neutral, had hit positive a little, but then went back down. Money flow really started to crater. Earnings are coming out right here. Overbought sell right here. Mark called that stock in his market letter. and boom, another break. So this is what we look for. Again, the examples I'm showing today, because we're talking to an options audience, are the focus on short term. I'll mention that the sweet spot of the model when you do the testing is actually out about 3 months to 6 months in terms of your ability to ignore the analytics, just bet or make your investments, I should say, based on the model. It's actually a mid-term model in terms of its sweet spot, but as you can see, when you combine it with the technicals and you combine it with the signals, then you really get your short-term price opportunities to make money. And on that note, we are going to go back to live, and I'm going to show you, again, using one of our Chaikin tools, how you might find opportunities as we come into earnings season. So we have something called Portfolio Health Check as a key feature of the product. Now what I'm doing is I'm loading the S&P 500 into my watch list, and I'm going to run what we call that Portfolio Health Check on it. And the Portfolio Health Check is a report you can run on any list that you have in Chaikin. So whether it's your own portfolio, an industry group, an ETF, or in this case the S&P 500, it gives me a combination of analysis and review of what's going on in that portfolio. So it's going to tell me the current portfolio health is strong, 30% of my stocks are likely to outperform the market, 75 or 150, I should say, are bullish, 75 are bearish. Last week, gainers and losers. Power gauges have flipped the previous week. But what we're coming to is right here. Earnings reports throughout this week. The report is always generated on as if you were looking at it on Sunday, so it gives you some of the week coming up. And on Wednesday, tomorrow, I looked earlier and I picked the stock NTAP that is coming out with an earnings report. It's a bullish stock on Chaikin. So what we're going to do is take a look at it, and I cheated because I looked at it before we started because I wanted to find one that I could show you all. I think I missed. So when we look at NetApp, we see a stock where the power gauge went bullish back last summer. Soon it had its personality change. Relative strength is now very solid. We have good Chaikin money flow. We're above our long-term trend, and we're coming out with earnings. So this is the kind of bet I would look to make on a stock where I expected something good to happen in the short term. And if I can remember what I did last time, I'm going to hand Mike back, Control, and we are going to take a look at another methodology for doing an options position.
Very good. Now, in general, many of my customers know that one of the main strategies I trade is following the radioactive trading techniques, using the married put position and then making various adjustments off of that. Now, the reason why I bring that up is the first thing I would do in this situation is we see the potential for a long-term growth, a good quick play coming up with earnings perhaps, as Davis showed, but also potential for a longer-term trend to be bullish on. The one thing I'd want to do first on Power Options is I'd probably go type in NTAP up here at the top, and I want to look at the quotes page real quick. This just gives you a breakdown of all the information that we have, fundamentals, technicals, volatilities, and so forth for this particular stock. What my eyes are going to be drawn to, in addition that we know earnings are coming up, is I'm going to take a look here, and we see that this is a dividend-paying stock. So even though we're coming up to an earnings, and one of the vast advantages of options trading is using it for leverage and speculation with lower prices in such as a long call trade or perhaps a bullish spread trade as well. But with a stock that pays a dividend and may have earnings coming up, we have a long-term sort of verified growth by the Chaikin gauge. I'd want to go into the search by symbol tool here under the married put menu. And I'm just going to type in NTAP. And I'm going to put my expiration date at all months. For right now, I'm going to put in more results. And what am I looking for on this position? Well, I'm going to look for something. Do I really want to go short term with the protection on this security? Well, it's going to be a low cost, but it's actually going to be highly inflated because the whole market knows that earnings are coming up. What I want to do is take advantage of maybe something that's further out in time. So I'm going to scroll down here, and I see about 130 days out, we've got a March expiration series. The advantage of doing a married put position, especially on a stock that pays a dividend going forward, is that this is much better than any stop order or trailing stop you could use. When you purchase a put option, we can lock in a guaranteed limited risk. Even if the stock dropped to $1 per share, for whatever reason, we still know that we can keep our range to a limit of only 5% or 6%. Or, for example, Davis, if there's a slight pullback tomorrow, the market reacts differently to the earnings and the stock pulls back 4 or 5% after it gaps up, but then continues to move up 7 or 8% the following 30 days, we don't get stopped out from that initial movement and then miss the upside. We're in control and can stay in this position. So with the stock right now at about 42.27, I like looking slightly in the money here at around the 44 or the 43 with about a 5.5 or a 5% risk. And what that means in that situation is, let's take a look at the profit and loss chart here in Power Options for this particular married put position. I would purchase shares of the stock. I'd purchase perhaps a March 43 put for $3.25, knowing that in the worst case scenario, even if the stock tanks to $27 per share, we could only lose 5.5% of our total investment. And if there's a gap down, which Davis, you know very well will happen in the earnings season, if the stock did drop 20%, you would be on the hook for that as well. You wouldn't get stopped out at 5% at your stop order. You would get the loss of 20%. As we all know from the martingale, if you take a 25% loss on a position, you're going to need a 33% gain on your next position just to get back to break even. Now, it's interesting to me that you brought up Skyworks earlier. Skyworks is a married put position I'm showing here that I've been trading since, I apologize, I've been trading back since about March, I believe. And let me just show you this position. This is where we kind of stand with Skyworks right now. I actually do have a call sold against it. But going into the earnings a couple weeks ago, we were in a position where we were bulletproof. We've collected the premium to pay for that initial at risk. We still have a high about 12 to 15% return on the Skyworks position, and we headed into earnings knowing that we were guaranteed in the worst case scenario to make about 3%, and we still had unlimited potential upside as well. That's almost better than a straddle or a strangle, because there's no chance for loss once you've bulletproofed the position, is what we call it. So that's one approach. I could use the married put going into earnings, especially since this stock pays a dividend, because just doing a long call, you won't take advantage of that dividend as well. But let's talk about what we saw before. For those of you looking at using speculation and using more leverage rather than paying into the stock position, we've got NTAP at about 42.30. Let's say we're expecting maybe a good 5 or 6% increase again from the earnings coming out tomorrow, taking a look at that positive gauge. So now we could go into the long call menu, and we could go into that long option finder that we saw before. And once again, if you're looking for long calls on a stock that you think is moving up in price, we're just going to put in our symbol. Let's just put in, let's say, a $3 increase on our stock. So what happens if the stock jumps up to maybe $45.50 at tomorrow's earnings? Again, keep a nice leveraged amount here of about $1,500. And again, let's just put our target date within the next couple of days. Let's keep this really short and say that we're hoping that the stock is going to have that pop, but it's going to stay around this price. Let's call it around November 26th or so as well. Let's go ahead and put in 11/26/2014. Let's go ahead and submit that. And once again, you're seeing only those options that would give you the highest theoretical yield based on your selection time. Now, if I did a shorter time frame, of course, if we drop this back to, let's say, 11/14 by the end of the week as well, we ran that, we'd probably see some expiration dates closer in time. And we do. We see some of the series for November 28th, the weekly options that are available, December 5th and December 12th. But interestingly enough, if we expect to see a 3 or 4 point gain, 8 to 10% gain due to the earnings announcements on NTAP, and we expect the stock to be trading at 45.50, the highest theoretical return would come from the December 5th expiration series, the 45.50 strike call, a current price of 40 cents, and if the stock does hit our target price on our target date, the value of that option theoretically would be $1.55, and this would yield a 276% return with that positive earnings movement as well. And once again, we had some questions come in about vertical spreads and other positions. Would you trade a vertical spread, or how would you analyze a vertical spread looking at an earnings report? Most likely, we wouldn't do perhaps a bull put or a bear call spread, which usually has a 5-to-1 or 10-to-1 risk-reward ratio if you look at that good 80% probability. But if I was looking at a bullish jump and I wanted to do a leveraged spread trade, as we did before, I'd go into our bull put credit spread tool and I'd click on the spread chain. And as we saw very quickly, we just probably plug in our symbol. Let's go NTAP. And I'm going to keep a closer spread width this time. I'm going to use a 2-point spread width. We're going to look for a minimum net credit, let's say, of 25 cents. And instead of using Friday's expiration, let's go out to November 22nd. That's 11 days away. And we're going to keep that probability at 75%. So just some basic views. And here we see the bull put credit spread that best matches that criteria. It's 11 days out to expiration. With the stock currently at 42.27, we're showing that we could sell the 40.5 strike and buy the 38.5. A 30-cent net credit against a 2-point spread would give us a 17.6% yield, a 75.6% probability. But if you really wanted to get closer in, you're really expecting that good pop and that positive jump on NTAP, well, maybe we could lower our probability, let's say just down to 65%. We'll see some closer in strike prices. And here we see that the 41.39 strike, just a little bit out of the money there. It gives us a 38-cent net credit now, 23.5%. We have a lower probability, but it's with the speculation, of course, of that large move. And of course, if you do debit spreads, the credit spreads here, that's looking at the bear call spread. For a bullish position, as we saw before, we'd be looking at that call credit and put debit parity. And last but not least, we had a question about the strangles. And yes, if you go into the long strangle tool, we could go into the search by symbol tool as well and analyze a potential long strangle with the different strike prices and the probabilities on NTAP heading into the earnings for tomorrow as well. Earnings plays are typically done by options investors with the long straddle or the long strangle. The advantage of using Chaikin with power options is now you have that positive power gauge showing you the potential for a bullish lean, so you may be able to just enter in the long call and get that good surprise from that good direction without paying the 2 potentially time premiums for doing a long strangle or a long straddle position, which has the highest time value payment because you're buying an at-the-money call and an at-the-money put as well. So for those bullish examples, if I've got a stock that pays a dividend, I see on Chaikin that my stock has shown me a good bullish move and we've got earnings coming up, I might be interested in doing that married put and following the radioactive trading techniques that are discussed in the blueprint for longer-term growth, unlimited upside with a guaranteed limited risk to the downside with the potential to bulletproof the position where I have no risk. And if it's a strong speculation and I'm disciplined enough to only trade a couple of contracts and not risk too much in my portfolio, we'll use that long option finder under the long call menu to quickly see in that 1 second after we put in our stock price expectation and our target date, which option would give us the best bang for our buck based on our price if the stock does hit our target price on our target date. And there's also tools for the vertical spread traders that we saw and evaluating a long strangle for earnings plays. In addition to that, one of our search features, if I was in the long strangle and I went into the search tool to identify positions, as Davis showed on Chaikin, where you can select the earnings view, I can create a search using options and technicals information, but tell the systems to only show me stocks and strangle position on securities that have earnings coming up within the next week. And so we can identify the different strangles that will match our cost criteria, our probability sum criteria, but also in the same aspect have earnings coming up in a shorter term. And then you could also go back and verify the bullish or bearish move with the Chaikin power gauge once you have your power options results from the default search and the patented search tools on power options as well. All right, Davis, are you still with us?
Before we started about how using the Power Options tool, you can do what he just described and actually create a list, input it into Chaikin, and then try to overlay Chaikin on that list of stocks to find the best candidate or two.
And that's correct. And you can also do the reverses. We discussed this too. If you have a list of those 10 or 15 stocks that are strong bullish, you could import them into your covered call screen, your naked put screen, or your bull put credit spread search, and run a search just for those credit spreads, bullish credit spreads, on those stocks that you found at Chaikin that have that bullish sentiment as well. So it can go both ways very quickly, and you can go back and verify, hey, these are the great probabilities, the returns and the probabilities I want for my vertical spreads. What does Chaikin say about these positions? Am I in the right place to really have that last bit of confidence, that good, strong confidence from the Chaikin results to enter this as a bull put spread or a calendar spread even?
Terrific.
All right. Well,
I love
Davis,
how simple it is just to get the, my issue was always not knowing what price to pay for what I want to execute on. I love the idea of having that expert over your shoulder telling you.
that's right. And Davis had asked me earlier about tools and criteria such as overvalued, undervalued, IV over HV, and things of that nature. And PowerOptions shows all of that. But one of the things that we were talking about earlier is that, and I tell all my customers during webinars, if I have the stock that I want, and I have the confidence to enter that stock based on my research in the Chaikin Power Gauge and the Chaikin Analytics, and I have the return that I want if I'm doing a premium sell, such as a credit spread or maybe even just a covered call, or I have the protection I want doing a married put or a disciplined long call position, if I have my target and I see the profit I can make if the stock does hit my target, and these are the tools to help you find that, does it really matter to me if the rest of the market thinks the option is overvalued or undervalued? Not necessarily, because it's still a good return for me. It's matched my trading plan and my trading goals, and that's the other aspect of PowerOptions. We teach all of the different strategies via webinars, white papers, and other educational materials, and discuss what exactly you should or should not look for in given positions, what to watch out for in long term. Do you always have to follow these myths and rules of options trading where you always have to buy undervalued options and you always have to sell overvalued options? Not necessarily. As options traders, we know that implied volatility is in fact a double-edged sword going both ways.
That sounds like looking for the unicorn.
That's exactly right. All right. Well, Davis, why don't I turn the screen back over to you for now?
Okay.
Let's see here. And I guess we wanted to address some of the questions that came in during our talks here. We did bring most of them in, but I think I have some other questions for you that came in. One of them was from Fitzroy, wanted to know, in the Chaikin Analytics, is there a breadth indicator, so for example, the McLean breadth indicator that's considered in the Chaikin Analytics?
There is not. There is not. We have a small handful of technical indicators that we think are the ones that you want to focus on. Obviously, there are hundreds of others that you can use in conjunction with it.
Mm-hmm. All right, let's see. Sam asks, well, this is more of a strategy question, since stocks remain overbought and continue an uptrend. And we see a lot of that. And Skyworks was one of those examples, actually, but it's worked out really well for me. Where and when do you exit the long trades in that situation?
Well, let's take a look at Skyworks just so we have something real we can look at. Each I can't talk and type at the same time. There we go. Each situation is different, so there's no rule, but essentially what we look for on Chaikin are we look for those indicators we've been talking about. So for example, if you look at Skyworks right now, it certainly does look overbought, but the power gauge is positive, relative strength is positive, money flow is positive. We don't worry about that. And what you'll see, in fact, take a look at the chart, it's constantly bumping against its upper band. And it comes down a little bit, but it's constantly bumping against that upper band. So we looked at Love earlier, and that had virtually the same picture. But sometimes you get worried about those stocks that are stuck in that uptrend, and you think, well, it can't keep going. Yet, they do keep going. So maybe not as crisp an answer as you'd like in terms of finding the point, but at the end of the day is I'm looking at the picture of model and market, and when that picture looks like it does now, I'll ride with it.
Absolutely, absolutely. Yeah, this one has been a very good position for me, so I'm extremely happy with that one as well. All right. Hugh had made a comment. He owns both of the books we mentioned earlier. I appreciate that. He had another comment that came in, when do you do a naked put trade? Well, if I was using the Chaikin tools and I was considering entering a naked put, what I would look for on this chart we're looking at right here is about 3 or 4 weeks ago. Notice when you had that decline, it dropped below the 200 average there. And then, yeah, right there, that's where you see the change. That is a buy signal for a stock. What they would talk about at Chaikin is probably look for that to buy a stock, which is also an opportune time to maybe sell a naked put position, a bull put credit spread, or perhaps even enter something along the lines of a standard collar position. So when you see a buy signal in that case, that's also a great time to do a naked put, especially after the pullback, because that will inflate the premiums a little bit and you'll be able to get a better view. Related to options, Shekhar asked, what about the implied volatility drops after the earnings? Volatility crush, always a concern. What happens to the price of the call we bought? We didn't have time to look at it today, but that long option finder allows you to put in a change in implied volatility to estimate the price to see the change as well. This is also why on Power Options, when we teach concepts of using the long straddle and the long strangle, we actually suggest going 3 or 4 months out in time so you can still take advantage of the long upward price movement of an earnings event going forward, long or short, depending on the earnings retracement, but you don't experience the volatility crush. And if the stock doesn't do anything on the earnings, you still have 2 or 3 months there to turn the trade into a winner. Okay, let's see here. I know I had a couple of other things there. The Chaikin tools, Davis, I apologize. Fitzroy asked earlier, this is based on end-of-day data right now. Is that correct?
Well, actually, we're seeing real-time data during the day. The actual chart itself is end of yesterday. So we do not have today until after the close. That's correct.
All right.
And again, it's really, think of this as an investing tool rather than a trading tool.
Exactly.
Not investing.
Here's a question that Helen asked, and I tried to answer this for you, but you're going to have a much better answer than I could, Davis. Helen asked, what makes the power gauge change before the relative strength does? So in some examples we were looking at earlier, you saw the power gauge sort of change, but the relative strength was still showing maybe an oversold or overbought, and the gauge was different.
I can't answer the question scientifically. I do know that frequently the power gauge will change before relative strength changes, and I'll tell you intuitively, the power gauge is, again, that idea of a reflection on Wall Street. So when we're looking at the factors that make up the power gauge, long-term debt equity, price to book, return on equity, these are not fancy, out of the box, right? These are bog standard, what everybody's looking at. So as analysts change ratings, as fund managers start to buy stocks, or traders like us start to buy stocks, that's what causes stock price movement, and the stock price movement is, in effect, what relative strength is all about, because relative strength, by definition, is how is that stock doing against the market. So if the market, individually, a bunch of individuals decide, I like this name, they start to accumulate it, the price goes up, by definition, you're going to see relative strength follow. But it certainly doesn't always happen that way. Sometimes the opposite happens. But generally, we, the model, I should say, is a reflection of what Wall Street is thinking, while relative strength is a reflection of what Wall Street is doing.
All right. Okay. So one last question that was addressed to me. This was related to, I'm sorry, what we were looking at earlier there. I just lost the question. Sorry about that, folks. That was Shakar's question. Oh, Al, what is the undervalue, overvalue based on open interest volatility? Most of the undervalued, overvalue we show in Power Options are based on, there's 2 different ways that investors use to determine that mainly. There's a lot of ways, but the one thing is the implied volatility versus the historical volatility. The idea of the options related to the historical volatility of the stock. It's one gauge of measuring an overvalued or undervalued option. Another way is simply just the Black-Scholes pricing model, which is known as the Black-Scholes ratio, comparing the actual price of the option to the Black-Scholes theoretical worth. And in that scenario, those models are sort of based on the past 52-week trading range of the stock and where the option is priced now and related to what it should be worth based on the movement of the stocks as well. G asked a question, will this work on the Thinkorswim platform? We don't have a direct link from Power Options to Thinkorswim. Chaikin, of course, is a separate entity from Thinkorswim. I don't know if there's a way to import those together.
No, we can import lists of names, so you can create your own list here if you take something out of your own account through Thinkorswim. And you can export a list from Chaikin that you can import somewhere else. But no, we have no connectivity like that.
And I think we've got most of the questions, but the last question here from John, and I think you're the best person to address this, Davis. John wants to know, what is the cost of the Chaikin tool?
Funny you should ask. Let's go back to my last couple of slides, because that is the culmination of our presentation, is to talk about the cost. Now, the normal retail selling price is $1,950 for a year, or $195 a month. we do a special for Power Options today, and this is good through Friday, where we're selling for $1,550. And what you're going to do if you're interested is you're going to go to chaikinanalytics.com/sign up, and you can sign up for Chaikin Analytics. Right near the end of the sign up is a place where we will ask for an offer code, and you can put in Power, or you can contact our inside expert, Dan Franz, at his email, or you can call him and actually do the whole thing with him on the phone or by email, which is, I think most folks actually just call in and set it up like that. Mm-hmm. After you do sign up, we do spend a small group or one-on-one session with what we call an onboarding. And like Power Options, we do an awful lot of education. We have sessions every single week that are effectively open sessions to come and ask questions and get answers and talk about individual stocks you care about, as well as regular webinars like this that are educational in nature with respect to any different topics we'd like to touch on. So this is the cost and the special for you all. If you'd like to test it in a shorter time period, you can take the monthly option of $195 a month and then later convert to an annual subscription. When you do become a client, you get that $300, or actually it's $400 off, excuse me for that, of the price. We have a product we call Chaikin Power Suite that's part of the product that gives you that portfolio health check and actually gives you 5,000 research reports, i.e. a research report on every stock we look at. Plus, we do our small group and one-on-one tutorials. We do our open forums. And importantly, we have that market insights I keep talking about, and I keep talking about it because Mark has made an awful lot of people an awful lot of money the last couple of years with his, not just analysis and the individual stock picks, but his broad overview of the market and things like Ebola and how that might affect the market. And he picked, right when Ebola was very hot a couple of weeks ago, he was one of the first folks to come out and talk about how it might affect transportation stocks, which it did soon after. And then every morning you get what we call morning insights, which is like what Wall Street firms put out for the institutional community, a morning note that talks about a quick overview of the market that day and a stock pick or two and a group comment or two from that day. So it really is a robust package of the product, spending quality time with you so you learn how to use the product, and then these 2 one-weekly and daily notes and newsletters. And again, we can't put them all up, but an awful lot of folks have done well, and all these testimonials I showed you really were in reference to folks who are leaning on Mark in addition to the product to make picks and having some really terrific profits. So here's the final slide I'll leave up if we have any other questions, so you can copy that down if you're interested. And at the end of the day, we are having a great run. We are very excited about the product and how it's behaved both in up and down markets recently, and how we just went through that big break and did well for our clients. So thank you so much for listening, and I'll hand back to Mike.
All right, that sounds great. I just wanted to point everyone to the chat window there. We texted you out the special offer there as well. So you'll see the special offer there with the sign-up link available for ChaikinAnalytics.com, and also the contact phone number you saw there for Dan F. at ChaikinAnalytics.com or 1-877-MY-PORTFOLIO as well. Very quickly here, let me just jump in, and I'm going to steal this from you real quick again. We'll come back to that in just one moment. And what we wanted to do here is I wanted to show everyone, let's see, let me log out here. Let's just go to Power Options. For those of you interested in the Power Options tools, I want you to know that you can sign up for a 14-day free trial at any time. Just go to PowerOpt.com. I'll send you that link as well. So PowerOpt.com. When you go to PowerOpt.com, simply put in your first name, last name, and email address. No credit card is required. You'll get a test drive of those tools for a 14-day period. So in addition to the tools we saw today, you'll also have access to the patented search tool and over 23 of those different strategies to create your own specific search. You'll have access to our portfolio tools so that you can go ahead and start tracking and managing those positions as well. John asked a question related to me, the cost of Power Options. Well, we offer a 20-minute delayed service. The 20-minute delayed service is only $60 per month. We do also offer a real-time service, so every time you run the search or refresh the page, you'll see only those quotes and those returns at that very instant, and that's $100 per month. We do have an upper level of service. You can add historical suite of tools to both the 20-minute delayed and the real-time for $40 more as well. So those are the subscription services to Power Options, $60 per month for the 20-minute delayed, $100 per month for the real-time. You can also access historical data as well. And just go to PowerOpt.com. I sent you a link there in the chat window as well. First name, last name, and email address, and you'll have a test drive of the tools for 14 days. David asked, I got here late. Is this being recorded? Yes, we did record the presentation. I believe it's going to be available both at Power Options and at Chaikin Analytics, possibly tomorrow as well. And if you have any further questions, let me just navigate back over here very quickly, and we'll just take a look here again. The next steps going forward to take advantage of the special offer that Chaikin is allowing, I believe it's about a 21% discount for their annual price. Go to chaikinanalytics.com/signup, mention the offer code POWER, or of course we saw you can contact Dan Franz there as well, 877-697-6783, which works out to be 877 My Portfolio. And then you can also reach him at danf@chaikinanalytics.com. And for those of you interested in Power Options, simply go to www.poweropt.com. All you have to do is put in your first name, last name, and email address. You'll have access to the tools for 14 days. Just as Davis mentioned for Chaikin, I host about 3 webinars a week on general strategy concepts, and we also have an open forum, open discussion presentation on Friday afternoons. Those are all free. As a Power Options trial member or subscriber, you can always sign up for a free coaching session as well. You can have multiple sessions. That's just about a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site and answer any questions that you have. If you do have questions later on for us, please just send us an email to support@poweropt.com. You can also call us during market hours at 877-992-7971 in the U.S. And if you live outside the U.S., you can actually reach us at 302-992-7971 as well. Okay, one last question from Al. Is radioactive trading a separate service? Yes, it is actually. Radioactive trading is a different service created by Kurt Frankenberg. And both Ernie and I trade that in our personal accounts as well, as we showed earlier. One last question for you, Davis. What is the advantage of Chaikin over a swing chart analysis, for example? You have any thoughts on that?
Yeah, it's really about the model. I mean, the Chaikin Power Gauge as a quantitative model is basically picking stocks. It's showing you for every stock, very bullish, very bearish, or wherever in between. And that's very different than any kind of a technical strategy like which I can't repeat because I already forgot the one you just mentioned, but it's just different and I believe more effective. I think if you look at the back-tested results, they'll show to be more effective. But I think more importantly is the idea of combining strategies that you use that you're comfortable and confident with something like Chaikin, because that power gauge, and I can't emphasize enough, is fundamental analysis. It is very different, a very different kind of analysis, and it's back to that idea when the model matches the market. And quite frankly, I would say that about your own strategy. When our model matches your strategy that you have found to do well, I am confident you will do better when you match them together.
Okay, sorry about that. All right. Okay, well, ladies and gentlemen, we do have some other questions came in, but I think we're going to wrap up for today. We will make sure that we address your other questions. And again, as we talked before, if you have other questions for Chaikin Analytics, simply email danf@chaikinanalytics.com. And once again, this special offer that Chaikin is offering through this webinar will end on midnight, I believe, on November 14th. Is that correct? Friday, November 14th?
That's right.
Okay. All right. Let's see here. And if you have questions about Power Options, you can just send us an email to support@poweropt.com or give us a call anytime. The 2 numbers available there for Chaikin, for Dan Franz, and for Power Options as well. Well, Davis, I want to thank you for joining us today. I want to thank you for presenting the Chaikin tools and just showing how powerful they are for stock research and analysis. And I think we saw how easy it is to combine the two together, a perfect synergy of analyzing the stocks and getting your sentiment using those powerful Chaikin tools, and then quickly applying the one-stop look at Power Options to see which is the best option or which is the best spread to match your needs once you have the sentiment on the stock and the strength of confidence to enter that stock position with the Chaikin Power Gauge. So greatly appreciate you joining us today.
It was my pleasure, and it was great to see your tools because, as I said, I know how challenging it is for the option players to figure out what is the best way to execute this idea, and I think you just showed us. Thank you very much, and thank all of you who stayed on the call.
Absolutely. Take care, everyone. Again, we will let all of you know when the webinar archive has been posted for Chaikin Analytics and for Power Options. So take care, everyone. Have a great trading week, and we'll see you at one of our live presentations coming up. Good night.
Bye-bye now.